Is this thing on? How about a non-political post, a non-political video? How about that for everybody out there who's been joining me in the discussion? I love it. That is what America is all about. We should be discussing these things. Hopefully my sound is on. It looks like it is. So a couple things. I'm going to show you some stuff. Now, obviously we know, and a lot of the stuff I've been talking about for a little while with regard to whether or not things are going to change in the housing space. So far, everything that's been lockdown oriented has been a huge boost for real estate. And there's a lot of common sense, makes sensical reasons why that's the case. And as we're entering another purple phase of lockdowns here in California, I think you're going to continue to see that trend be the case. Prior to COVID, and I'm going to show numbers here in a second on mortgage rates, and we'll look at the stock market too. But conceptually speaking, the more lockdown-ish the scenario, the better real estate is going to do. Also, if there's threats to the economy, you're going to see the Federal Reserve stepping in, as they have and have continued to pledge to do through next year, to artificially suppress mortgage rates by buying mortgage bonds every day. So if those things are going to happen in concert, we're going to have an increase in demand for housing, which I'll explain again here in a second. And then we're also going to have government intervention that helps propagate the ability to purchase housing. You've got a recipe for housing prices to continue to go higher and the market to continue to stay hot. Now, will this happen through the holiday season? Will people finally take a breather? I don't think so. Also, we have the next wave of buyers, which I'm going to talk about. The next wave of buyers are people who missed out 6 months ago. I can't even, just me, I'm one loan officer. Dozens and dozens of people who were looking in February, March, even maybe in April, okay? I would say just for me, probably 40 to 50 people, somewhere in there, who fell off the grid. They stopped looking. Now, those people are going to have, you've heard of fear of missing out. That's the fear that you might miss out. They actually missed out. People who bought a home in February or March, they're up huge already. In fact, I'm doing cash out refinances for a lot of my VA buyers who bought back then. They're able to pull out enough equity to actually put an ADU on their property or completely renovate it or buy investment property somewhere else. So values have gone up a lot since the COVID crisis began. And so we're going to see if the more that we're in lockdown and the more that the economy is in limbo, and the election may have something to do with that. But as we'll go through here, so let's do some sharing here. Sharing is caring, yeah? Let's do some sharing then, yeah? So let's take a look at this. I'm not the best with this, but I'm going to do my best for you. Okay, so let's increase the size here a little bit. By the way, everybody who said stand-up desk, thank you. I am doing so much better. I was worried because if I stand in lines, my back hurts, but it's not happening here. And so this has actually worked out for me. So then it's been huge. So thank you so much. So we saw what happened sort of leading up to the election. There was this decline here, which was sort of expected. The uncertainty of an election, into late October, we saw a decline. Now, traditionally speaking, at the end of the year, there's what's called the Santa Claus rally, which is, hey, it's, buy the rumor, sell the news. Companies are going to have great quarters and report good numbers in January and February. So may as well buy it here and then sell it then. And that's kind of what they do. But we started seeing, and you guys saw this, it was right before the beginning of February or the beginning of November. And before the election, the days heading up to the election, the stock market was going higher. These are big moves here. I mean, we're talking about going from, one day we're here at 27, and then the next day we're at 500. So remember that day we're at 500 points. And then the next day, the day of the election, we're up another 300 some points. So the market was going higher ahead of the election. This was because Wall Street always knows this information before we do. The vaccine results. Okay, the vaccine results were going to be good. We got that after the election, and it was very, very good. And that was this day. So on that day, we went from, 28.3 to, we're up like 800 points. So, but remember, intraday, we were up like 1,300 that day, and it came back 500. So it went up and touched the top. So why am I talking about stocks right here? Because a lot of people believe that the top might be in on stocks. If that's the case, though, it would be good for mortgage rates. Remember, we have mortgage rates being artificially suppressed by the Federal Reserve and their buying of mortgage bonds. But also what we don't have working for us is sort of that natural demand for bonds because stocks have done so well. So if stocks come in, and that may make you think, oh man, things are getting bad, it's actually good. It's actually good. So two things. Number one, why is a lockdown good for real estate? If you are confined to your home, in other words, if you have to be at the house for the majority of your time, the time that you are in existence, and the only time you get out of the house is to go for a walk because you can order your food and you're ordering all the stuff you need from Amazon, and going to the store is a mess. By the way, I'm seeing toilet paper shortages and stuff like that. I ordered a ton on Amazon. Everyone who's watching this right now, go to Amazon and order a shit ton of toilet paper because that's coming. If it hasn't already come to a store near you, it's coming, and Amazon is ready to roll. So I probably have a couple months worth of TP ready for this crap. But in general, when people are locked down, that is when they realize, they really fully, right in their face, get confronted with all the things that are wrong with their property and all the things that they wish they had in a property. And it makes people go, you know what, if we're going to be locked down, if this is even a possibility, let's buy our dream house. So it catapults people into wanting to buy their forever home, which is very, very important for real estate. With the coinciding low interest rate environment, that is a recipe for demand to continue to increase. Okay, so let's take a look at mortgage rates here. And I'll admit that I haven't updated this with you as much as I should have recently. And that's because it's been so crazy that I really haven't had time to go to the bathroom, much less make a video. So today I'm dedicating this time to help make sure you know what the heck's going on. So when we look here, a couple things. First of all, today we're up 36 basis points, which sounds great. It's like, holy smokes. And it is. But notice what happened. So if we go back here and we look, and each one of these is a day. So this is today, Thursday. This was actually Tuesday. Bond market was closed yesterday. That's Monday. Dream Crusher Monday is what that was, is it really sent rates lower, or sent rates higher, bond prices lower. And then this is the previous week. So let me go Friday, Thursday, Wednesday, Tuesday, election day. So the day after the election, you saw that I made a post and I said bonds signaling strife and anguish, right? Because look at this huge gap up. We gapped up enormously here. And hopefully you can see that. We gapped up enormously. And what happens when that happens is usually you get an improvement to pricing. Now, brokers may have seen a nice improvement to pricing at a bank or two here and there. It's the nice thing about being a broker. If you have 10 different banks, maybe one or two of them is buying into this. Our bank didn't buy into it. They were correct that it was going to come back, that this was a blip, some sort of blip, whether it's a short cover, a hedge, whatever, something is going on there. It's a blip. So that blip faded quickly. And so we had this nice run up here, which was, as you can see, above the highs that we've been experiencing. And we're getting close back to that point. Here we're at 103.28. This is 103.5. So we're only maybe 22 or 3 basis points away from that sort of high. Rates are still really good, is my point. I know I'm getting technical here, but my point is that rates are still very, very good. On the conventional side, there's a 10-1 arm that's badass. If you have someone who's buying a starter condo and going conventional, want to minimize their mortgage insurance, and want to put a small amount down, but don't want to get throttled, the conventional loan, the 10-1 arm, if you have good credit, you can get 2.25 on that. Now, depending upon your qualifications, Derrick Evans, NMLS 155010, not everyone qualifies for a loan. But if you do, you can get as low as, on the rate sheet, 2.25%. And that's with no points. Our lender fee is $895 for those. So if you're looking at that, you're buying a condo, under 5, 10, 400 loan amount, look at the 10-1 arm. FHA and VA rates are insane. Now we go down to 600 minimum credit score on that. You get into the twos all day. Low twos if you have good credit, etc. So rates are still incredibly good. And if the stock market rolls over, if this thing gets worse, and you can see here it's climbed a lot recently, if that rolls over a little bit, and it may not be till the beginning of the year, Santa Claus rally could be good. But the other thing did they already change it? Shoot, the ad changed. Oh man, I was going to show you that. Maybe if we go back to the homepage, it'll show it. What I was going to tell you is we're in the process right now of the economy shifting. Things are changing. Certain jobs are going to be going away. Let's see if they bring it up, a story up over here. So Chipotle, I'll just tell you the story. Chipotle has started their first like no person store, where basically you can come in and you don't actually have to interact or touch anything. It's completely touchless. You come in and you use a screen or whatever to order, or actually you can use an app to order, and then people will make the food and set it out. There's like this touchless sort of society. We're going to see more and more revolution in this regard in the economy. Certain businesses already poised for success that already sort of have that hands-off scenario are going to do really, really well. And there's new businesses that are going to be created as a result of this. And other businesses, such as restaurants, are going to just adapt. How many times have you ordered Uber Eats, in the past 7 months? Probably more than you had previously in your entire life. I know I have. And so those are the things that we're going to see change. We're going to see things change, but the economy is resilient. Capitalism concept is resilient. People will find ways to innovate, find ways to create things that people need. But one thing that you can count on, pretty much guarantee with these circumstances, is that real estate is going to do very well. So let's talk about this next wave of FOMO buyers. Now, they're not technically FOMO buyers. They don't have a fear of missing out. They missed out. So what's going to happen when this wave of buyers who are starting to recirculate, okay, they're starting to come back. They saw what happened. They realized they missed out. They were looking at a house for $500,000. They decided to cancel escrow, or they decided, you know what, COVID, I don't want to mess with it. We'll wait till that's over with. Prices will probably go down. Now they're looking at those same houses. They're $550,000, $575,000 with multiple offers. It's absolutely crazy bidding war. So those people, when they come back into this market, they are going to come in guns blazing. Okay. I can already tell you the preparation calls I've had with these people, letting them know, all right, the market's different than it was when you were looking back in March. You're going to have to come in ready to roll, and they get it because they've seen it and they know what they missed out on. So the FOMO buyer is the next wave of buyers that we're going to have come through, the people who sort of took a step back when COVID first began. And that buyer is going to be ready to go. So while I've seen a few deals happen here recently where there wasn't a really crazy bidding war going on, still the main circumstance we're dealing with is lots of offers on properties priced under 600 grand. Really, I mean, shoot, under 800 grand, but under 600, it's going to be crazy. A lot of people choosing to go up north as well. We're going to continue to see that happen. Riverside County is going to do really, really well. This is sort of just the beginning of this shift. This is not a blip. This is a shift. This is a macro shift in what's taking place in the economy and the real estate market. Forget who wins the presidency. It's still, up for dispute. We'll see what happens. You know what I think is going to happen. And we'll see what happens. But it doesn't even matter. It doesn't even matter. Regardless of that, real estate will do well. The Federal Reserve will be buying mortgage bonds. Mortgage rates will be low, and people will be more motivated than ever, more motivated than we've even seen, is my prediction, to buy real estate, to find their dream home. So we've got a recipe here that's really, really good. If you own real estate, if you're going to sell real estate, if you're looking to buy real estate, you need to be very strategic. If you have the ability to be patient, here's where the tips come in. If you have the ability to be patient, you're renting right now, try to get yourself on a month-to-month lease. Even if you have to pay an extra $100 or $200 a month in order to do that, get yourself on a month-to-month lease. You don't want to have a gun to your head when you are trying to buy a house. So if you can get on a month-to-month lease, that way you're able to go out, put offers in, and kind of get a feel. It's like when in the UFC, when they're fighting, or boxing, well, not as much as boxing, in the UFC, the kind of feel out period, you have a chance to do that. You have a chance to feel things out a little bit before you start throwing blows. And I think that's going to be really, really crucial. So if you can do that for sure. Also, be prepared to offer a higher earnest money deposit. This is something that is overlooked a lot of times, and 1% is sort of conventional. If you can put in more than that, 2%, that can give you a nice advantage or a shift in what's possible with regard to being in a competitive environment. There's going to be a lot of people putting in normal size deposits. If you can put in a bigger one, remember, you get that money back. It goes on your side of the ledger when it comes down to the end of the closing. And so higher earnest money deposit flexible time frames. These are the ways that you can win. And just know, if you see something that you really like, be ready to roll, be ready to pull the trigger, be ready to go, to come in guns blazing, because that's what it's going to take. All right, I got to get back to work. My phone's going crazy. Share this if you think it's helpful. Hopefully it'll help make your friends smarter than everyone else. We'll see you soon.